Welcome back to Investing Talk Podcast.
Great to be here.
Today, we are zeroing in on the upcoming earnings season kickoff, specifically focusing on Delta Airlines. They're set to report their fiscal Q3 2025 results pretty soon.
That's right. They really set the tone for the whole airline sector reporting season.
Exactly. So our mission today is, well, to give you a shortcut to being fully informed. We want to look past just the headlines, understand the consensus, the crucial operational stuff, seasonal factors.
And what the market's actually pricing in, volatility-wise.
Right. Before we jump into all those numbers, though, please remember to subscribe, like, and comment. It really helps us out.
And yeah, if there's a specific company you want us to look into, definitely leave a comment below. We do read those.
Okay, so let's unpack this Delta situation. We've got the sources right here detailing pretty much everything we need ahead of their Q3 report.
Yep, and that date is locked in. It's October 10th. That's when we expect the official report for Q3, which, covers that whole crucial summer travel period ending September 30th.
Before market open, right.
Before market open, yeah. And then the investor call follows shortly after that same day. Always a busy morning.
Okay, let's start with the hard numbers then. What is the street actually expecting Delta to deliver for this peak season?
So the consensus is pretty straightforward on the surface. Analysts are banking on $1.49 in non-GAAP earnings per share, so EPS.
$1.49, okay.
And that's built on about $14.57 billion in total revenue.
Now, those figures, they imply some pretty serious growth, don't they, compared to last year?
Oh, absolutely. We're looking for EPS to be up quite a bit from the $1.34 they reported in Q3 last year.
Okay.
And that revenue number, it needs to show about 6% year-over-year growth to actually hit that consensus mark. So, yeah, expectations are fairly high.
That sounds like a strong expectation, especially since, like we said, Q3 is supposed to be their bread and butter season.
It is.
But does Delta usually deliver on these Q3 expectations? I seem to recall something, maybe a bit of a hiccup, the same time last year.
Yeah, that's a really vital point to bring up. Historically, Delta's mostly been an earnings beat machine, They surprised analysts positively on EPS and revenue in Q1, Q2, and Q4 of 24.
Right.
But if you look specifically at Q3 2024, that was the anomaly. They actually reported a slight miss on both metrics, just slightly, but still a miss.
Why does that matter now? Was that just some kind of one-off event, or could it signal something, maybe an underlying vulnerability specific to this busy summer quarter?
Well, it matters because it injects a little bit of caution, right? That Q3 24 miss, it was largely put down to really intense operational pressures.
Like what?
Think higher labor costs, maybe slightly weaker than expected yields on certain international routes, even though overall demand was still high, stuff like that.
Oh.
So the question for this year's Q3 report is really whether they manage those unit costs better this time around, especially with what was likely record-breaking passenger traffic again.
Right. Okay, so here's where we compare that consensus, the $1.49 EPS, to the company's own scorecard. What did management signal previously? How confident were they feeling?
Well, they signaled confidence, definitely, but they gave themselves a huge runway, a really wide range. Delta guided for Q3 EPS between $1.25 and $1.75 fast.
Wow, that's a massive 50-cent bracket.
It really is. The analyst consensus, that $1.49, sits kind of right in the middle, but management's low end, that $1.25, that really becomes the floor.
Okay.
If they were to fall below that $1.25, that would likely be seen as pretty problematic for investor confidence.
And full year. Did they touch that?
Yeah, they reaffirmed their full year 2025 EPS guidance at $5.25 to $6.25. So that suggests they feel, pretty stable about the year overall, despite the Q3 range.
It's still interesting that the Q3 guidance range is so wide. Are analysts starting to converge on a specific number within that range, or is there still a lot of disagreement out there about how successful the summer actually was?
Yeah, there's still notable dispersion, which is exactly why the implied volatility, which we'll get to, is pretty high.
Okay.
I mean, yes, overall expectations have been rising modestly over the last 3 months. We saw about 7 cents lifted in the average EPS estimate and maybe $110 million on revenue.
So trending up slightly.
Trending up slightly, yeah, indicating steady confidence. But among the 18 or so analysts covering the stock, the estimates range from a low of $1.29 all the way up to $1.67.
Whoa. So $1.29 to $1.67, that's almost a 40-cent spread just among the analysts?
Exactly.
If they can't agree within that kind of range, doesn't that make the $1.49 consensus almost, well, less meaningful? How do we find the signal in that noise?
That's a great question. I think you find the signal in the drivers, not just the headline number itself.
Okay.
That wide dispersion basically tells you the market is highly uncertain about two key things: cost control and yield strength during that peak period.
Makes sense.
If analysts were all tightly clustered, say, within 5 cents of each other, you'd probably expect a fairly mild reaction to the report, assuming they land near consensus.
Right.
But because the range is so broad, the actual outcome relative to management's own floor of $1.25 and ceiling of $1.75, that's what's going to dictate the size of the stock move.
So hitting the high end, like $1.67, would be seen as a massive win.
Huge win. But hitting that low analyst estimate of $1.29, even though it's above the company floor, would probably feel like a miss on sentiment.
Gotcha. Okay, let's shift focus a bit to the operational context. We keep mentioning Q3 being the strongest quarter. Can we quantify that a bit more? Why is this period just so crucial for airlines like Delta?
Well, it really boils down to two things: volume and pricing power. Q3 captures the entirety of the Northern Hemisphere's peak summer travel season.
Right. School's out, vacations.
Exactly. People are taking those planned, often inflexible vacations. Business travel usually dips a bit, so airlines can really focus on maximizing leisure yields, those higher fares people pay for summer trips.
And we saw that play out last year.
We did. If you look at Q3 2024, Delta's revenue was $14.1 billion. That was roughly 6% higher than their revenue in either Q1 or Q4 of that year.
Okay.
So the market absolutely demands that airlines extract maximum efficiency and, crucially, that premium pricing power during this specific window.
Speaking of efficiency, let's dive into maybe the most critical operational metric management actually gives us guidance on the operating margin.
Ah, yes, key metric.
They hit a really strong 13% in Q2 2025, which was great. But then they guided Q3 down quite significantly to a range of just 9% to 11%. Wait, why such a drop from Q2? That seems counterintuitive for the highest revenue quarter.
Yeah, it does seem odd at first glance, but that guided margin drop is probably the key item to really understand going into this report. It reflects two main things.
Okay.
First, just the seasonal cost mix.
Yeah.
Yes, Q3 has super high revenue, but it also tends to have significantly higher operational costs.
Like we mentioned before.
Right.
Weather, staffing.
Exactly. Summer thunderstorms mean more disruptions, potential delays, rebooking costs. You often need more seasonal staff, maybe paying overtime. Just maintaining that peak operational tempo costs more.
Okay, that makes sense. What's the second factor?
The second is that management is almost certainly baking in some expected unit cost inflation into that 9–11% guidance. They know certain costs are rising.
So basically the market's already braced for margins to compress, maybe by 200 to 400 basis points compared to Q2.
That's right. The hope or the expectation is simply that the sheer volume of high summer revenue compensates for that margin squeeze.
If they somehow report an operating margin above that 11% high end of their own guidance,
then that's a huge positive signal. It would suggest they managed to contain those summer operational costs much better than they led the market to believe.
right, the narrative shifts immediately.
Instantly. It goes from, okay, cost pressures confirmed, as expected, to, wow, superior operational execution under pressure.
So that operating margin commentary on the call might actually be more important than the exact EPS number itself.
I'd argue it is, yeah, because it speaks directly to their future profitability resilience, how well they can manage costs going forward.
Okay, now when we look at where the revenue growth is actually coming from, the sources we reviewed showed some mixed signals lately. Passenger revenue in Q2 was solid, up slightly year over year.
Yep, core business holds up.
But the other revenue category that includes things like cargo, MRO, maintenance services, and crucially, their high-margin loyalty programs and partnerships.
Yeah.
That actually declined slightly in both Q1 and Q2.
A slight softening, yeah.
Why should we care too much about that if the main passenger business, flying people around, is performing okay?
That's a fair question, and it really speaks to the longer-term valuation and margin story. That other revenue, particularly the loyalty program stuff like their Amex deal, that's generally much lower volatility and significantly higher margin than just selling plane tickets. It's what analysts often look at for diversification and, importantly, long-term margin expansion potential.
Okay, so it's seen as a more stable, more profitable revenue stream.
Exactly. So if that stream continues to soften, even slightly, it suggests the core passenger business is having to carry too much of the load. That could potentially limit their ability to expand overall margins beyond just these peak seasonal quarters.
So we need to see that other revenue trend stabilize or ideally reverse that slight decline in Q3.
Precisely. Stabilization would be good. A return to growth would be even better.
Okay. Looking beyond Delta's internal numbers now, what kind of macro environment were they operating in during that July to September period? Were there any sort of external tailwinds lifting the whole airline sector?
Oh, absolutely. The overall environment seemed quite supportive, actually. We saw US TSA throughput numbers, basically, the total count of passengers screened at airports, up about 5% year over year for the quarter.
So confirmation of massive industry-wide traffic, still very strong demand.
Yep, huge demand. And consumer discretionary spending, people's willingness to spend on non-essentials remained pretty robust through the summer. It showed people were still prioritizing travel spending.
And fuel prices. That's always the big variable cost.
Thankfully, jet fuel prices, while always volatile, were relatively stable during Q3. They were up maybe only about 2% compared to Q2. Not insignificant, but certainly not a major headwind compared to some periods we've seen.
Okay, so strong demand, robust spending, relatively stable fuel. Those three factors sound like they lean pretty strongly towards the bull case for Delta's Q3.
They definitely provide a supportive backdrop, yes. It helps explain why the revenue consensus is where it is.
And then, sort of capping off the confidence indicators, we also saw management kind of put their money where their mouth is during the quarter, didn't we?
We did. That dividend announcement was significant.
Right, a 25% dividend increase effective in September. That, combined with some recent high-profile analyst upgrades, I think Morgan Stanley raised their price target to $58.
Yep, that was a notable one.
Those things together seem to signal pretty strong internal belief at Delta, right?
They really are powerful, forward-looking statements from the company. A 25% dividend hike isn't trivial. It suggests management is extremely confident in the durability and, importantly, the sustainability of their free cash flow generation.
Even while navigating those Q3 cost pressures we talked about, and maybe the possibility of a general economic slowdown down the road.
Exactly. It signals they feel they can handle those things. It's a very positive signal, I think, that maybe counters some of the anxiety lingering from that slight Q3 miss last year.
Okay, so that sets up a picture of, let's say, internal confidence clashing a bit with some external operational uncertainty reflected in that wide analyst spread.
That's a good way to put it.
Let's move to the market's expectation then. Management signaling confidence with the dividend hike, but is the market fully buying it? What does the options data tell us about maybe some hidden fears or just the expected size of the reaction?
Yeah, the market is certainly hedging its bets, not fully committing one way or the other just yet. We can measure this by looking at implied volatility, or IV.
Which is basically the cost of insurance against a big stock move.
Pretty much, yeah. And the front week implied volatility for Delta's options is sitting around the 62nd percentile, which means it's quite elevated compared to its usual levels.
Okay, so higher than normal expectation of a move.
Definitely. And based on the price of the at-the-money straddle, which is just looking at the combined cost of a call and put option at the current price, the market is implying an expected move of plus or minus 6.8%.
Wow, nearly 7% move, one way or the other, potentially on the day after the report. That's substantial for a big, established airline like Delta.
It is substantial. It tells you pretty clearly that the market believes the results are not fully priced in yet. There's going to be a reaction, potentially a volatile one, once the actual numbers and guidance are out.
Okay, so the volatility basically signals this report feels a bit like a coin flip to the market.
In a way, yes. Based on the analysis in our sources, we can actually break this down into three sort of defined scenarios that the market seems to be preparing for, each with a rough probability attached.
All right, let's hear them. Start with the base case, the most likely outcome, according to this analysis.
Okay, the base case is given about a 60% probability. This is essentially the scenario where Delta hits pretty close to the consensus, but doesn't offer any major surprises, positive or negative.
So roughly that $1.49 EPS, $14.57 billion revenue neighborhood.
Exactly. We'd see revenue probably between $14.50 and $14.65 billion, and EPS landing somewhere between, say, $1.40 and $1.59.
And the market reaction.
This scenario likely results in roughly that implied price move we just talked about, plus or minus 6% to 7%. Because even just hitting consensus will resolve that ambiguity created by the wide analyst dispersion and the company's wide guidance range. It's kind of a sigh of relief move either way.
Okay, makes sense. Now for the upside, the bull case. This sounds like what management might be hoping for given that dividend increase.
Right. The bull case is assigned about a 25% probability. The upside here really relies on two specific triggers happening.
Which are
One, stronger than expected summer demand actually translating into better than expected yield strength, so higher average fares. And two, superior cost control, pushing that operating margin clearly above the high end of their 11% guidance.
okay. And what would the numbers look like in that case?
For this scenario, you'd probably need to see revenue hitting maybe $14.65 to $14.80 billion and EPS landing solidly in the upper end or even above the company's range, say $1.60 to $1.75.
And the stock reaction.
If that happens, especially if they combine it with positive commentary or raised guidance for Q4 or the full year, the market could see a really significant jump. We're talking potentially plus 7% to 12%.
Okay, a strong positive reaction. Now the flip side, the bear case. The nightmare scenario that's driving that downside volatility expectation.
Yeah, the bear case is seen as the least likely with about a 15% probability. This gets triggered primarily by a significant disappointment in cost management.
So that unit cost inflation proving worse than guided.
Exactly. Or maybe if those international yields really did soften more than anticipated during the summer. In the scenario, you'd likely see revenue come in a bit light, maybe $14.14 to $14.50 billion.
And the EPS. This is critical relative to the company's floor, right?
Absolutely critical. EPS would likely land somewhere between $1.25 and $1.39, so potentially below consensus and maybe even flirting with or breaching that $1.25 company guidance floor.
Oof. And the market reaction there.
If they confirm serious cost inflation worries, or especially if they fail to clear their own $1.25 EPS minimum guidance, the stock could react quite sharply downwards. The analysis suggests a potential drop of minus 8% to 12%.
Okay. That detailed scenario planning really gives you, the listener, a comprehensive framework to think about this. So moving towards our final takeaways then, what's the synthesized outlook? How's the sentiment leaning going into October 10th?
Based on everything we've looked at, the overall market sentiment derived from the sources seems to be neutral to perhaps modestly bullish. We gave it an internal confidence score of around 7 out of 10.
Why neutral to bullish?
Well, the consensus estimates seem reasonably well supported by those resilient travel trends we discussed, and definitely by the strong capital return policy, like that big dividend hike.
Right.
But the persistent concerns over cost inflation are real, and those slightly mixed signals from the other revenue streams still warrant a degree of caution. It's not a slam dunk bull case.
So for someone tracking Delta closely, the most crucial things to listen for on the conference call might not even be the Q3 numbers themselves, which are backward-looking by then.
Right. The focus shifts immediately to the forward commentary.
So what should be the absolute priorities for listening on that call?
I'd say prioritize management's commentary on two specific things. First, their explanation for the Q3 operating margin result. Did they successfully contain costs and maybe beat the 11% high end? Or did they struggle and come in closer to the 9% floor? Why?
Okay, the why behind the margin, what's second?
Second, focus intently on any commentary regarding domestic passenger revenue growth trends. That's really been the primary engine driving the recent successes and earnings surprises.
Right.
Any sign that domestic demand is weakening heading into the fall and holiday season would be a major concern for the market, almost regardless of what the headline Q3 numbers were.
Got it. And just briefly, from a trading or strategy perspective, how do investors typically approach a high volatility event like this? One that's priced for almost a 7% move.
Well, given that high gap risk overnight, but also the stock's very high liquidity, many experienced traders actually focus on strategies designed to sell that expensive volatility premium rather than making a purely directional bet up or down.
Like what kind of strategies?
Things like defined risk option spreads, maybe iron condors, or potentially short straddles or strangles if you have the risk tolerance. These are basically bets centered around that implied 6.8% move.
So the goal is to profit if the actual stock move turns out to be less volatile than what the options market was pricing in.
Exactly. But, and this is crucial, position sizing has to be managed very carefully to account for that elevated risk. A bigger than expected move can still cause significant losses on those strategies.
Makes sense. Okay, so as we wrap up, maybe a final thought to leave listeners with. As we look at that potential for upward guidance revisions in the bull case scenario, the real question seems to be, can Delta successfully maintain its strong operational foundation and keep that analyst optimism going as it transitions out of the peak summer travel season and into the, traditionally strong holiday booking period?
Especially considering those operational struggles they faced in Q3 last year, can they prove they've moved past that?
Right. That seems key.
Well, hopefully we've provided you with the key numbers, the drivers, the context. Now you should have a solid framework to evaluate that October 10th report and, importantly, the investor call that follows.
Thank you for tuning in to Investing Talk podcast. We definitely look forward to guiding you through your next set of sources.
And just remember, this analysis is purely for educational purposes. It is not investment advice. Please do your own research.